All right, folks, I have the top of the hour here, so I'm going to kind of go ahead and get rolling with an introduction and a little bit about myself. My name is Jeff Clark. I'm a regional director here with GoldenCare. I've been with GoldenCare for 26 years. Spent my first 5 or 6 years in the field selling long-term care kind of exclusively. I eventually started selling Medicare and annuities and other products, life insurance, but I more or less kind of started and really have always kind of focused on long-term care. So I've written about 700 long-term care policies over my 26-year career. So I don't obviously actively sell anymore. My job now is to kind of help recruit and train. So on a daily basis, I'm kind of comparing, contrasting, and looking at different plans in the industry, whether it be a life and long-term care hybrid or a traditional long-term care, a short-term care plan, a home health care only, depending on what clients, agents bring me, whether it be again, perfectly healthy married couple or a 74-year-old widowed lady with osteoporosis and a compression fracture. We're going to help find the coverage, compare different plans, and help game plan for that agent. So with that, we do a lot of product breakdown. And so today it's a little different. We're going to be breaking the product down, also kind of echoing what we've been saying while on this short-term care plan that, well, Omniflex namely, but short-term care in general is really taking over where long-term care is left off. So I'm going to put some of that message out there. Then also kind of talk about how to start the conversation a little bit in short-term care, how to introduce it, how to handle the objections. So we kind of grabbed some things from several presentations and kind of put them together in this one. So I hope you find it beneficial, but let's go ahead and get started. But so again, how to start that conversation. So how to introduce short-term care during sales meetings. I've been starting a lot of my webinars with this just to make sure every agent that's possibly on my things knows that the need for long-term care has never been higher. My 26 years, I'll talk about this later, but you go out there and people would say, what's long-term care? Is that nursing home insurance? Is that, there was such a little knowledge, understanding, awareness, or anything back, 26 years ago. That's not the case today. Everyone is very keenly aware of what long-term care, extended care, what these things are. This COVID thing rolled through and people were just terrified of going to a facility. That's because you were 11 times more likely to die from COVID if you received your care in a facility versus receiving your care in the comfort of your own home. 11 times more likely. That's not twice as likely, 11 times. So what it did basically is kind of freaked out the American population to the point that they really started focusing on long-term care, to the point where we do know that 90% of married couples will need some type of care. And so 90% of adults have never had a real discussion about long-term care. And a Harris poll that has some of the stats here, but 61% would rather die going to a nursing home. The interesting thing in that Harris poll, in my opinion, was 87% of people were longing for or looking for an agent or someone to talk to them about long-term care plans, short-term care plans, about extended care. So I would argue that if you're one of those people who've been sitting on the bench, maybe thinking about offering more of these plans, maybe you do Medicare, maybe you do life, you want to get more into long-term care, short-term care, now is the time. People are very receptive to hearing that. So I would encourage you to do it because I think it's a real big need out there. A lot of folks are worried about it, and there's not a lot of licensed, certified, and or even uncertified for short-term care agents out there talking extended care. So I think it's well received, and you'd be good to do that. Okay, shifting market. We've been talking about this a lot as well. The long-term care market, 10 short years ago, there were 80 companies in the industry selling long-term care policies, traditional long-term care. Now we're down to about 3 that you can actually broker. There's a couple other ones in the group market, but in a nutshell, why have all these companies gotten out? Well, it's very expensive on the insurance company. They paid a lot of claims. And so over time, the insurance companies had these catastrophic claims. And I'm going to talk about this later, how short-term care can kind of save the industry. Kind of on my way out, we'll talk about why it's kind of replacing long-term care in general. So maybe I'll save to that slide there. But basically speaking, long-term care companies are getting out. Short-term care companies are coming in. We're seeing more and more of these short-term care plans. And in my humble opinion, they handle most of what long-term care does. They just do it without all the heavy price and premium, all the certification requirements, the 90-day cert. They can just do it in more of an effective way that's more affordable. So, all right, And this is why you're seeing such an influx of products. Right now, we have GTL and Aetna have been around with their great short-term care plans. Wellaby now with Medico has just come out with one. We have other home healthcare only options. Obviously, the GTL, Manhattan Life, Aetna, Medico, True Freedom. These are all home healthcare only plans. Manhattan, of course, now is something that we partner with your GoldenCare. We help them put together, in our estimation, one of the best short-term care plans out there. Year to date, I suspect more companies are going to be coming into this market with more robust benefits and better short-term care options. I really do think it's the way companies are going. I've heard whispers, and I want to mention any names of other big carriers that are now developing short-term care plans. So I suspect in a couple of years, we're going to have numerous options of what you're just seeing here. But for now, let's go with what we've got. As these new short-term care plans hit the market, you know, I've told other agents out there that, you know, rest assured, GoldenCare is going to be that one-stop shop for all these plans. We've always kind of been the long-term care home. Well, as those plans can maybe start going away, or that wave hits the beach, if you will, we'll have all the short-term care options for you. Whatever products are in this extended care industry, whether it be long-term, short-term, home health care only, we're going to have the options for you. So this nice little color-coded map shows you where plans are available. So you'll notice, again, depending on what state you are, unless you're in one of these gray states, which I always call the coast, the corners and the coasts in Minnesota. For whatever reason, those are the states that don't ever approve short-term care plans, but we do have other plans in some of those states. So if you are in those gray states and looking for you have a client that needs something, GoldenCare, if you can tell by this map, we have lots of different options in lots of different states. So anyways, great maps for product availability, and we're just going to see more and more of this as we move forward. Okay. So again, a lot of these, you know, Lynn helped me put this together. She kind of put some notes down and so I just there's going to be a lot of talking on these slides. So I bear there's not a lot of great graphics or pictures, but how to overcome this short-term care, long-term care stigma. A lot of stuff you're going to hear me say today is basically stuff I've been telling people for 15 years about overcoming the objections about long-term care and starting that conversation. Long-term care has kind of had this negative connotation to it for some time. You know, financial planners, you know, you don't need long-term care, you know, friends of people. I always listen to people that tell me, yeah, I don't need long-term care. When you bring up the subject, they kind of look like, you know, they get this look on their face like, no, I don't need that. You know, that's, you know, my financial planner told me, or my friend from church told me. And I always wondered, it's like, well, who are these people giving this advice? You know, 90% of married couples are going to need care. How are you planning on doing that? And maybe we were just marketing it wrong all along. You know, when you talked about long-term care, it's this long commitment. You know, what if you end up in assisted living, or you're living in a nursing home? It just paints this end-of-life picture for clients that actually there's a lot of denial in there. They don't want to talk about it. They didn't really want to address it. And so there's always been this kind of, I don't know, and that's now we start calling it short-term care insurance. Well, it doesn't take, it's not very hard for clients to figure out that, oh, this is just another version of long-term care, right? So I kind of, the name short-term care insurance probably right off the tee box here isn't going to help us. But, you know, we hosted a panel of experts this year, July 26th, and what feedback, you know, what terminology are they having success with? And, you know, people do call it different things: extended care, alternative care, longevity planning, longevity health, nursing home avoidance. We use just, you know, nursing home insurance. There are people that still use that. Simplified issue, extended care. We kind of arrived, and it's my humble opinion, or a variety of people out there. And I think if you talk to a lot of long-term care agents that have been in the industry for a while, they'll agree we kind of have a marketing issue. It's not so much we have a product issue. We have great products. We have a great and huge need out there. 90% of married couples are going to need long-term care. I'm not going to bore you with more of those stats. You know, at least one, you know, average length of care for males, you know, 1.7, females 2.5. So there's a ton of care out there. But how do we term it? How do we, what terminology are we using? I think the extended care is an easier thing to see. You know, just look at your own folks. If you had to take care of them at all, or any elderly population out there, when they go to the hospital, you know, they're going to have to basically stop at a rehab center somewhere before they get home. So this extended care is becoming, you know, bigger and bigger. And honestly, as Medicare, and I think we're going to talk about Medicare in a couple slides here in the DRGs, but Medicare is doing less and less for folks. Medicare is not moving towards helping people more and more. We all know we have an aging population. We have a baby boomer issue. We, when they wrote Medicare and they wrote these programs to help take care of the elderly, there were 11 people working into a system for every one recipient. So you had 11 workers paying into that Medicare system for every one recipient, and those recipients didn't live that long. Well, now we're down to 2.5 workers for every one recipient in that system, and those recipients are using $2 to $3 they used to use. So when this was all put together back in the 60s, it was great. Well, now the numbers are upside down. So whatever, and I don't have to tell people that it's a big, mean government that's going to take away their Medicare. It's not like they're taking away their Medicare. They just simply can't afford this tidal wave of care that's coming their way. We're running out of able-bodied caregivers. We're running out of money at the Medicare level. So it just makes sense if you paint the picture to folks that you're probably going to have to start doing some of this care on your own. And so what we try to do with them, again, is have you really done much with your extended care? What are you planning on doing with your extended care? So that's the word you're going to hear me use a lot. So try to kind of put that one in your back pocket, extended care. What have you done with your extended care? How are you going to do it? So overcoming the stigma of short-term, long-term care, I don't really want to, if we look at long-term care, a lot of the policies that are being sold in this day and age are very small policies because they've gotten so expensive and so unaffordable. So I don't think we need to reinvent the wheel here on short-term care versus long-term care as far as creating a need and introducing it. Basically, if you've been selling long-term care in this industry, we're already kind of selling short-term care plans just by the pure fact that we're selling smaller long-term cares now. We did just, again, more research for you, but we just looked at our last 3 years of Mutual of Omaha business that GoldenCare did. 30 million of premium is a pretty decent sample size to try to draw some conclusions here. But if you look at 65, 2/3 of the policies we sold were between 2 and 3 years. Okay, only 15% of policies were over 5-year benefits. Average premium, $2,800. So most of our clients that were 65 plus had maximum benefits of 2 years. And why? That's because the premiums have gotten so high that, again, as we're selling long-term care, we've already been selling short-term care plans all along. Maybe we just didn't know it. And here's some more interesting information on claims. So if you look at what actually happens out there, the average number of years people use this type of care. Any services, it's about 3 years. Again, females a little longer. They're typically need about 2.7 to 3 years of care. And this is always a tough thing we talk about. This is services, right? So how long did mom and dad take care of each other, or maybe that daughter or adult children that are helping out, niece, nephew, friends, churches? There's a lot of informal care that happens in the community. So we're talking about, these are just literally services that mom couldn't do it anymore. Okay, so the average length for any service is about 3 years of care. That's what we need on the way out. At home, unpaid care only. So this is, again, bathing, dressing, washing, doing laundry, running errands, getting groceries. Okay, on average, people need 1 year of unpaid caregiving. Okay, paid care, a little less than 1 year. Any care at home, about 2 years worth. Facilities, nursing home, 1 year. Assisted living, less than 1 year. So this is the average length of care. You notice how small those are? And yet when we're out there trying to sell long-term care, and agents still do it to me, they call me and say, yeah, I need a 4-year, a 5-year, a 6-year plan. And I tell them, I'll quote it for you, but the premium is going to be $9,000, annually. And so most people can't afford, 6, 7, 8, $9,000. So we're kind of forced to sell these smaller pots of money with smaller plans, 2-year plans. So anyways, if you know much about the industry and you're working with anyone who's 65 plus, we're already selling short-term care. Okay. All right, pros again. All right, another thing I want to mention here about short-term care, and this might help people get over the objection of it, or the long-term care plans were harder to trigger, right? So if someone gets cancer, it's not necessarily going to be a long-term care claim because you typically don't need help with 2-year 60 ADLs until the very end. You may have cancer for a year, but that last month is when you actually get the care. There are a lot of things in the long-term care arena that don't get covered. With short-term care, there's how do you trigger a short-term care plan or a long-term care plan? Well, you have to have 2 out of 6 activities of daily living. You have to be deficient on 2 of these 6 ADLs: bathing, eating, dressing, etc. So otherwise cognitively impaired, and that works for both long-term or short-term. Cognitive impairment's going to trigger either way. But on the 2 out of 6 ADL, for a long-term care plan to trigger, a doctor has to sign off on the fact that this ADL deficiency, the fact that you can't bathe or dress yourself, that's going to go on for a period of longer than 90 days. So that's why so many claims for long-term care, people think they fractured a hip, or all these things you're seeing here, a knee replacement, osteoporosis, broken bones, a fractured hip, cardiac arrest, heart valve replacement, bypass surgery, hip replacement or fractures, motor vehicle accidents. These are all things that people might get better for in 2-3 months. They're not going to be a long-term care claim, but they are a short-term care plan. So without that 90-day certification, short-term care is going to fit the bill in all these situations. And so I hear a lot of agents tell me that restoration of benefits isn't a big deal, because you'll hear us tout that when we talk about short-term care. Well, for your clients, it's important for them to understand that these things right here in front of you, and I argue if you do show these things, this particular list of ailments, they're going to understand these things can happen. Okay. And as a matter of fact, in our presentation, we're going to have lists similar to this. So, okay. So what is an objection? Again, this is just kind of pulling parts from other presentations of long-term care. Same thing. Actually, probably you could pull this slide from any selling 101. What are the 4 main reasons clients won't buy? They don't think they need it. They don't understand it. They can't afford it, or there's no urgency, right? These are all kind of selling 101. But we're going to try to address some of these. All right. First of all, when it came to long-term care, I'm a big believer. Sure, again, I keep saying long-term care. I mean short-term care. Both, call it LTC / short-term care. Both of these, again, are extended care is what we're doing. So when I was with my clients, maybe you got done with the Medicare meeting, or maybe just they were actually curious about extended care. You know, have you talked with anyone about your extended care planning? You know, what is your plan? Who are you working with for your longevity planning, your extended care planning? So I'm talking to a client. I also want to know, have you talked about this with your children? And I thought I was pretty successful in the field. I sold most people I went and saw, I talked to, as I had the means and they had the need for it. But I would really talk about the family. Is mom taking care of you? If you have a stroke, is she gonna be able to lift you out of the bathtub? Of course, the guy will look at you and he'll say, well, I'm gonna have my wife shoot me if anything happens, right? Well, once we walk through those dynamics, and that's probably not gonna happen, what is your plan? Are your children gonna rally around? Does your child work? Are they gonna quit their job and move in? Are they moving in with you, or are you moving in with them? And how are you gonna handle bathing? Are they gonna actually help you bathe, or are you gonna hire someone for that part? Or, they seem like tough questions, but honestly, this time of year, for whatever reason, for me, I used to really, around Medicare season, you're talking to people about their Medicare plans. If you're an AEP, even people on Medicare supplements that aren't changing their benefits still get a little squirrely this time of year. They want to talk about their prescription drug coverage, or you'll start talking to clients. And if not, you should be engaging them. Maybe even sending them a letter out. We're putting together a letter. Again, I told you I might be just speaking more on things, but we're putting together a prospecting letter that hopefully after the AEP that says more or less, hey, now that all their Medicare stuff's put to bed, have you really thought much about this extended care? What are you doing with your extended care? What's your plan for this? Maybe a little rate of something with a short-term care rate in there. Some of those stats, that 90% of married couples will need some care. So on these open-ended questions, I really would kind of hammer that point home as, what is your plan? And this time of year, Medicare season, you're going to see your kids over Thanksgiving. I would encourage you, maybe talk to your kids. Have you even talked to them about it? Who's your more responsible kid? You probably got one that's maybe closer to you, one that proximity-wise, maybe one you're here in, maybe you live in Kansas City, Missouri. You've got 2 children in the Kansas City area, but the other one lives in California, and the other one's in New York, or so it comes down to that one. Have you had that discussion? Maybe over Thanksgiving, it's time to sit down. I can give you some numbers. I can give you some plan, designs that you should honestly discuss these with your children. Plant that seed. So in my humble opinion, that was a great way for me to kind of get things going. I would really talk about the family, find out who that caregiver is going to end up being, and saying, well, it's probably my daughter, Debbie. Debbie is probably, the more responsible one, and, the other one doesn't. Well, have you talked with Debbie about this? I'd be happy to give you some numbers. I really encourage you to talk with Debbie. What's the plan when you get down the road here for this extended care? So really make it a family member. It's really an emotional sale. don't hammer them with stats. I know I've already given you stats, but you guys are agents, just have those in your back pocket. I would argue that the more of an emotional or more of a family matter sale you make this, the better you'll do. Okay. And a lot of times you can eliminate these objections before they even come. And I think we'll talk about our presentation next. So you want to flush these objections out before they come. Interesting, I never really thought of this one, but a couple of our colleagues here thought that's the biggest thing that's keeping people from looking at it, is they don't think they can qualify. The reason people, this is true of when suddenly your car breaks down, you think of the need to have this, car insurance or the extended warranties, or as soon as you start having health issues, you think maybe I should have had that long-term care. So unfortunately, people call us, when the house is already on fire. They've had that stroke. They just got diagnosed with dementia. It's on early onset, Alzheimer's. They'll call here in a panic saying, we got to get data policy. Well, it's too late, right? So a lot of people are sitting there with these pre-health conditions thinking they can't get long-term care. So that's really keeping them from even asking about it or looking further into it. I can tell you that we have plans no matter what their health is. As long as they're not currently in a nursing home receiving care, we have plans on a True Freedom that we can get something for them, whether it's home care only, whether it's a short-term care, a long-term care. So you would be surprised at things we can get covered, lots of existing health conditions. So take that health and underwriting thing away from them. We have a pivot presentation I'm going to talk to you on the next slide that will help you with that. Kids and extended family. What I used to do, I don't know if it's, I don't like the word trick. How do you, to flush things out? I would ask people ahead of time. Tricks wrong word. Setting the table, setting the expectations. I don't want to give them, if they've already kind of told me that they make their own decisions. So if I ask them, hey, how involved are your kids? Do your kids make your decisions for you at this point? Are they making your financial? No, we make all our decisions ourselves. Okay, good. Well then, because what happens at the end of a meeting is they go, I got to talk to my kids about this. Well, you've already told me that you make decisions yourself. Now, why are we deferring? Even though I encourage the family discussion. So we're trying to flush these kind of objections out ahead of time. The other thing is price. When I would do a presentation, I would tell them more or less that you can afford some coverage, whether it's going to be $20 a month or $500 a month. Even I pointedly ask them, can you afford 20? They'd say, yeah, I can afford $20 a month. Can you afford $500 a month? No, we couldn't do that. But you would agree that somewhere in between here, we can maybe look at something, right? And so you can develop it whatever you want, but make sure they know that there are low prices available, that maybe they're the decision makers, and that we can get them underwritten. We can get them coverage no matter what. And to do this, again, we have two presentations. I strongly urge you to use these if you're not, because everything about creating and objection stoppers and building this need for short-term, long-term care are in these presentations. The pivot presentation will walk you through and ask questions, and as the client answers things, you press different buttons inside that PowerPoint. It's going to pivot to different areas of the plans that will be able to. They tell you they've had, I don't know, stroke 2 years ago. They tell you they've had, lupus. You hit certain buttons here, and it's going to take you to only the products that they can buy at the end of the presentation. So you're not going to create someone's need and come in, oh, sorry, you can't get this. So it pivots automatically based on how they answer the questions and lead you down a path to where the end you have options for them. Beautifully laid out, wonderful presentation. If you're not using that or the missing link to create the need, then forget everything I'm saying. Grab a track, grab this presentation and use it, because no matter how good you might think you might be, there are a lot of hot buttons that have been researched over the last 25 years, things that are in this presentation that you may not think are important, but all of us have our blind spots when it comes to selling. I promise you, I think I've been doing it a long time. I still learn new things. When I hear an agent say, explain a certain benefit or do handle an objection a certain way, I'm like, you know what? I really like that. I'm going to steal that. So these are all, this presentation has had the top long-term care experts over the last 25 years contribute to this. There has been so much put into this thing over the years, and it's a track to run on. Maybe you just kind of have it in the background, but at least you won't miss some of the big spots. So if you're not using a presentation, I suggest you should. Give me 1 second. Got a call. Okay. All right, and we have available. We can get you these. They're available on our website. Call our marketing office. We'll get these in your hand. Okay. So Again, we're going to go to Medicare, and I'm going to kind of wrap this up. But 2 reasons people need extended care. And so here's another way to kind of create that need in that client's mind. I don't like to get real technical because I told you earlier in a slide that if someone doesn't understand something, they won't buy it. Well, short-term care plans are very simple, but creating a need, I try to explain to people what's going on with Medicare right now. I've already kind of told you that the Medicare is running out of money. There's a tidal wave of people hitting them, and they can't possibly continue to pay the benefits that they're currently paying out. So one way that they've kind of cut back is this diagnostic related groups, okay, DRGs. Very interesting for clients to understand this. So hospitals are in a tough spot. I'll give you an example of a cardiac arrest, heart attack. So when a hospital has a patient that arrives at their door, they're Medicare age, okay, so they've had a heart attack. Well, that hospital looks up immediately to their DRG, the diagnostic related groups. They know that when they get that, Mr. Smith comes to the door, they're gonna bill Medicare for 3 days because that's what the DRG says for heart attacks. So a hospital, let's just say a hospital, I don't know, just for easier math, it's $1,000 a day, right? So the hospital will be reimbursed from Medicare for $1,000 for each of the first 3 days. Now, what if they're not able to get Mr. Smith out of there in 3 days? Well, they go in the red. They lose $1,000 if he's there 4 days, 5 days. But trust me, hospitals don't like to lose money. They can't afford to. They're constantly juggling. Sometimes they're able to get Mr. Smith up on his feet and get him out of there in 2 days or less. All these things, Hicks fractures or 6 days, all these ailments have days. Hospitals are constantly trying to get ahead of the game and get you on your feet and out the door before the DRG runs out. So they lose money on some because there's always mitigating or complicating factors. So someone comes in with a heart attack, then they have, I don't know, a stroke or something, and now they're there even longer. And so it's a constant juggling act with these hospitals. So when I paint this picture, they aren't, and people know this, they don't keep you in the hospital very long anymore. They'll move you down a wing to that hospital. They'll move you around the court, same building, but now they're going to bill it as extended care. And now you're on the clock. That Medicare pays the first 20 days as long as you are improving. Once you level off, you don't get this coverage from Medicare that people think they have. So I paint the picture of how quickly people will move you out of a hospital into recovery care, and that is extended care. This is where you don't have Medicare coverage all the time. And so talking about the acute needs, the DRGs, might not be a bad thing to use. That's also in our PowerPoint, by the way, I just mentioned to you. The other thing, again, that's I guess the note here, remember most health policies also use methods to limit hospital size. So people that are under 65, same thing. Their insurance is gonna do the same thing. They want you out of the hospital as quickly as they can. Okay, the other thing is the chronic needs. And this is also part of our presentation, but Alzheimer's, chronic, osteoporosis, diabetes, kidney, circulatory. And I'll usually ask the client, can you see how one of these things would happen? Oh yeah, my uncle had a stroke, or my aunt had cancer, or yeah, my dad had dementia. Or so, again, these are part of the presentations, creating that need. I strongly suggest that you use a PowerPoint, but at least understand the DRGs and the reasons people need care. Okay, not to go into the whole presentation thing here. So the objections, price, health and underwriting, products that are too complex to understand, the whole my kids will take care of me, and rate stability. So I'm gonna let's talk about price here and I'll kind of get you out of here. I've already kind of addressed the health and underwriting. Short-term care plans, this particular plan, Omniflex, they don't have nearly the underwriting restraints because the benefits are smaller. They have the underwriting with especially the Omniflex, the new product we have. I'm gonna show you some rates for that. You'd be surprised how many people can get it. We're picking up a lot of our long-term care declines with a short-term care plan because it doesn't have nearly the stringent underwriting. My suggestion would be if you have clients you didn't think qualified, maybe that got declined, call us. We'll walk you through the underwriting guide. We'll teach you how to pick up some of these people with a short-term care plan, okay? Kind of coach you up on how to do that. But let's just look at rates here, because remember, that's one of the biggest reasons people don't buy. Everyone looks at price. Someone who's 60 years old can get a $100 a day benefit, $3,000 a month for a year, or for home care, $100 a day or $3,000 a month. And that's an all cash benefit, by the way. $37 a month. Someone who's 55, $55 a month. And if you're taking the Omniflex plan, for example, short-term care, they have a $300 drug reimbursement. So $300 a year, that's gonna knock $30, $28 a month off that premium. So people that are 60, we're talking about $10 a month to get a $3,000 a month benefit. Again, I'd probably sell the $200 a month in lieu of that, prescription drug reimbursement. But just look at some of those things. A 70-year-old can get $6,000 a month benefit for 167, and they can pass underwriting. So the prices are there. Real quick, look at a traditional versus long-term, short-term care versus traditional. Like I said, we're already selling short-term care. This is a typical long-term care plan. This is a 60-year-old couple, female at 60. But for this one, we wanted $4,000 a month benefit for 3 years. This is the long-term care piece. Remember, it's a 3-year plan. All we're doing with short-term care is we're squeezing that $4,000 a month. We're going to call it $12,000 a month. We're going to squeeze it into a 1-year period. All right, so we still have $144,000 worth of facility benefit. With long-term care, the $144,000 is both your facility and your home care benefit, either or. Over here, you get $144 for a facility, $108 for your home care. So, and they have restoration benefits there, which I mentioned earlier is very attainable with short-term care. Look how much more benefit you're getting. And look at the premium here, $1,100 versus $1,900. I could show you the same example here for a married couple. Same thing, $4,900 versus $10,095. And this is what I talked about earlier. This is why long-term care has been a tough sale lately. And this is probably why when you're out there creating that need or introducing long-term care / short-term care, you put together a benefit that's, geez, you're in an area like in the East Coast where, the benefits start at least $9,000 a month. You got to write at least $6,000 a month. You put together a little 3-year plan. It's only $250,000 pot of money. And look at that premium for a married couple, $9,500. Well, no wonder they're not buying, right? But if I can come over here and offer them half that price, $4,900, you might get people to look at that. So one of the biggest ways to overcome objections, price. And by the way, these benefits, I would buy this Omniflex short-term care plan over this traditional. Why? Well, actually, I have a slide here in come claim time. Yeah, I do. Take a look at this at claim time, right? Just think about this in a rational person. Anyone, if I'm the client, I can see this. If I'm going to go on a claim, and remember, I've been paying premiums in, right? I'm paying this monthly annual premium. And the idea of paying insurance is that, if you use it, it's kind of nice that you get your money back out of it, or you don't really want to use long-term care insurance, but you don't want to use your car insurance. But if I do, would I rather receive $48,000 over a period of 3 years? Remember, I might die halfway through that claim. Or I'd rather receive $144,000 over the course of 1 year. For half the premium, I would take the $144,000 all cash over the course of 1 year instead of being wait for 3 years to be bled out my money slowly. Okay, it's so crazy to me that long-term care is as expensive as it is. With the way it pays out, it's so tough to get payments out to you. All right, so again, look at this at come claim time. I'm just going to give a couple quick examples. I think I'm going to wrap this up, but the real advantage comes at claim time here. With example 1, this is someone who's had a stroke. Now they had that same plan I showed you a couple slides ago here, where the one's $2,000, $1,900 for long-term care, $1,100 for Omniflex. So when they have that stroke and they hit the facility for 15 months and they die. So they were in a facility for, remember the average is 1 year. So I'll just say a little longer than that, 15 months. That way it gave the long-term care a chance for the 90-day elimination period it has to go, because this is a 0-day, by the way. Oh, well, this was both 90. Okay. So after 90 days, both benefits will pay for 1 year then. Well, over that 1 year period, the Omniflex paid out $144,000. Traditional long-term care paid out $48,000. And let's just say the person didn't die. Let's not be Debbie Downer today. Let's say that person recovered from the stroke. They came back home. They live a happy life. Okay. The Omniflex benefits restores right back up to $144,000 again. With traditional, he's left with $96,000. Okay. Again, look at the premium here. So much easier payout, bigger payout, all cash payout, half the premium. Example 2, hip fracture. Right. 6-month home care claim where family was doing it. I don't know, mom broke her hip, dad's taking care of her. Okay. Total paid out. Omniflex, we're going to access the 50% can be paid in cash to any family member. So over the 6-month period, $27,000 was paid out to Mr. Smith to help take care of Mrs. Smith. If he had traditional long-term care, Mutual Omaha is still a really good plan. That's what I'm using here. 25% cash benefits built in there. So that means over the 6-month period, Mutual Omaha's long-term care plan would have paid him $6,000. On the flex would have paid out $27,000. Okay, last one here. This is a hip fracture, 6-month home health care claim with an RN visiting 3 times a week. Okay, now on the flex a full indemnity benefit. So if you have $400 a day, even though the nurse only charged $150, they're going to pay you $400, just how it is. So coming out 3 times a week over a 6-month period, over that time, the OmniFlex short-term care would have paid a benefit of $21,600. Long-term care would have paid $10,800 or less. Let's just say it's a basic nurse or whatever the RN isn't charging on the full $150. So they're only going to reimburse up to $150. If the RN is charging over $150, you pay the difference out of pocket. But if she charges less, you don't get that money. So it's a reimbursement deal. So anyways, just 3 examples there. And I think we're going to go ahead and then pack a punch. Yeah, let me just go to the very end slide of this. The short-term care for a small amount of premium can really pack a punch. Yeah, right there. $163 here for a 55-year-old person to have a $1 million maximum benefit, $576,000 if you inflate it for inflation over 25 years. 25 years later, this 55-year-old has $500,000 and it could be restored. But again, even at $500,000, that's a hell of a benefit for 163. Okay, Medicare, and I've already talked about this earlier. All right, 2 slides left, and I'm going to wrap her up. Medicare people, and introducing to them. So it is Medicare season. I've probably already covered a lot of this, but keep in mind that with short-term care, you can actually get these Medicare age folks underwritten. I know that, well, precisely, I look at our own block, 50% of our long-term care is being declined that we're submitting at this point. If you look at the ages 65 and older, we're only getting about 70, we're getting about 30% of that issued, okay? 7 out of 10 cases that we're issuing at this point, we're trying to submit to the carriers, long-term care carriers are not getting done anymore if they're over 65. You're really gonna be targeting people who are 50 to 65 on long-term care. Otherwise, it's a pretty tough road to hoe there. That long-term care thing can be very difficult. This is why we have short-term care. So your clients, and by the way, people who are Medicare age are much easier to explain or create the need of long-term care. They're getting closer. They already know it. They have friends, acquaintances. They're getting to the end. They are worried about it. Younger folks, they're 55. They don't think about it as much. 50-year-olds, they just don't. It's in the back of their mind, but they think they have time to put off. They're going to get that later. That's a pretty common, I think, headspace for that early 50s, mid 50s person. So once you're talking to someone who's on Medicare, they do know they need it. Unfortunately for us, that 70% of the time, we can't get them anything with long-term care. Well, now we can with short-term care, all right? And so what are these Medicare people worried about? And you can bring these things up to them in your Medicare meetings or wherever. They're worried about being a burden. They don't want to have their kids have to quit their job, move in with them, all that kind of stuff, okay? They're also worried about running out of money. They're worried about, are they able to afford this care? They know, and again, depending on what you look at, the amount of care that the average person needs, I've already told you 90% of married couples. Well, females, and I've read this in a couple of publications, females, it's $167,000 is what a female can expect to have to pay for their extended care in their lifetime. Males, it's about $130,000, okay? So they are worried about their finances and they're worried about being a burden, but the biggest thing they're worried about is about their independence. They don't want to have to run out of money and be put in some place where they don't want to know where they're not calling the shots. Seniors want to be independent. They want to call the shots of when they're getting their care, how they're getting their care, in what form they're receiving it, where they're living. This is vitally important to them. And so I mentioned it's more of an emotional sale. Talk about seniors about their independence. Where are you planning on doing your care? Are you going to move into assisted living? Are you moving with your children? What's your plan when you can't care for yourself anymore? Do you have something set up? I promise you, if you ask those questions and dig down and really get the truth out of them, I'll just have my wife kill me. When you get around that garbage, ask them, have you talked to your kids? Thanksgiving is coming up. I encourage you to address this. Life's a funny thing. If you don't make decisions ahead of time, life will make those decisions for you, and you won't like the decisions that you get, right? But if we have some planning where we have options, it's going to make that a lot easier. But now when we do this conversation with the Medicare people, we actually have a plan that will underwrite them and take them. And that's the big thing. That's why, in my opinion, with short-term care, you're covering all the things we used to cover for long-term care. But now we're picking up all the other things: accidents, slips, falls, fractures. Remember, the 90-day certification is not required in short-term care. So now there's just a lot more realization. If we talk about extended care, anything leaving the hospital, we have a plan for you. It's affordable and you can get it. This is why, this is my last slide. This is why, in my opinion, the short-term care industry and our agent base, hopefully you folks, can save this industry. You know, with long-term care plans, the minimum was 2, so you could write a 3, 4, 5-year plan. Now with short-term care plans, the maximum is 2 year. Because remember, you have a restoration benefits of 1 year. So this caps the risk for the insurance companies. So they're not going to burn to have to get out of the industry. Like I mentioned, all these companies that used to be in long-term care, well, they ran from the product because they got their, they got their butts handed to them in claim time. And so a lot of carriers don't want this business anymore. They got out of it. Okay, this is why we're having such a problem with the companies that are still in long-term care. Don't want to underwrite anything. They're taking the very best business they can get. They're cherry picking. Okay, inflation with these long-term care plans, unlimited inflation benefits, 5% compound, right? These things are just putting those carriers in a hole. With the short-term care, they have limited inflation options. They can, double it. Like with Omniflex, it doubles and it stops growing. Other ones only inflate the inflation, not the home care. So there's some kind of safeguards put in there. So you don't have to have that catastrophic claim that you have in long-term care. You have limited risks that a short-term care company can see and underwrite, and they can basically, the underwriters can see it, the actuaries can put together, it's a definable risk that they can handle. Okay, so that way, because of that, the underwriting on a short-term care can throw the net a lot wider. They can take on a lot more risk that the short-term care plans just simply can't. Okay, and sometimes with long-term care, it's a long time. It takes 6, 8 weeks to get things issued. It's a long sales process. Short-term care, couple page app, things will get issued about 7 to 10 days. Benefits are very affordable, very flexible. It's all cash. I can help you. Anyone here at this office can help you with that. If you're looking at your next traditional long-term care plan, if it's a young, healthy couple in their early 50s, we're going to sell them long-term care. They can afford anything. They can buy the more robust benefits. We'll look there. But if I suspect most people who want to look at long-term care are now getting a little older, they've got some health issues that are making them worry, and so too often we have people who want to buy it who can't get it. Well, now that short-term care solves that. We can help out so many more people. There's no certifications, no partnership certification for the agent. Remember the no 90-day certification to get on your for your claim, no 90-day ADL deficiency. So really, short-term care allows us to go back to 20 years ago when the long-term care industry was rocking. We were helping so many people. So my suggestion to you is suggest it, introduce it, talk about it. Your Medicare clients, even your non-Medicare clients, what are you doing about your extended care? What's your plan? Are you moving into a facility? Have you and the wife discussed it? You and your family? Talk about it with your clients, because I promise you they're looking for you to do that. And GoldenCare is here with all the product design, and we'll make you look good on that end. What you need to do is start that conversation with them, and just, again, dig down with family. Dig down with what their plan is. Where do they see themselves being cared for? Is their child moving in with them? Are they moving with their kids? Are they going to assisted living? What is their plan, and how are they planning to fund that? So anyways, I hope some of the stuff was helpful for you. I want to tell you that all of our presentations are on our goldencareagent.com site. Again, goldencareagent.com. This and all of our presentations are recorded for better or for worse. They are on there with different speakers. So, like Tom Randall or Dennis Randall or John Randall, or we have a variety of speakers on there. We've got Manny and Lynn doing things on the pivot presentation, or the pivot underwriting tool. So if you're looking for more help, start there, goldencareagent.com, products and training. Otherwise, call our number, 800-842-7799. We're happy to help you, help introduce, help create the need, help design a plan, get you the app, get you the brochure, show you how the online app works, whatever you need in that sales cycle, anything you can think of, we're here to help you. Prospecting letters, we're putting a bunch of those together, post-Medicare stuff. So again, we'd love to help you. I want to thank you for coming on board today. Give us a call. Let me see if we have any questions here real quick before I log out. Sometimes people will type them in. Bear with me. Okay, we do have a couple here. Let me just see. All right. Okay, I have a question here, and it's what type of sickness would require a $12,000 per month benefit? A super nice nursing home would not eat up that kind of benefit. No, it wouldn't. It'd probably be $6,000-7,000 a month, but with a short-term care plan, it's indemnity, so you get the whole 12,000. You could put the other 6,000 in your bank account, right? The point is that you're recouping premium dollars you paid in that you were not getting with a long-term care plan or a lot of other insurances. It's a pure cash benefit. So getting 12,000 back a month is a nice payout. And again, not that you want to go to a nursing home to get a claim, but you do get the whole amount. So it doesn't matter what the bill would be. And by the way, it's 12,000 a month. If you're on the Eastern Seaboard, nursing homes out there are all at $10,000-12,000 a month. So, but anyways, maybe in the Midwest here or Shreveport, Louisiana, where the lowest care in the country, maybe only be $4,000 or $5,000 a month. The extra money would stay in your account. So I still think it's always good. You know, if I'm a client here, I would want to get my premium dollars back as quickly as I could if I paid in all of these years. So my fear would be, was this insurance worth it? I mean, I paid this much in, I only got that much out. Well, if I had a way to extract money 3-4 times as fast out of it, it'd make me feel a little bit better at night. Okay. Other than that, yeah, I think that's all we have for questions. A couple of good ones, actually. I'm really actually glad you brought that up because it is a powerful thing. The indemnity is it's overlooked, even by myself. You know, and I didn't even say at the beginning of this, I overlooked the power of short-term care for many, many years. And I feel a little bit, you know, like it was on my blind side a little bit. I just didn't see it. And now I do. And maybe that's because the Omniflex, the new plans coming out are so much stronger. But I really do think the short-term care plan is going to be a savior for us for creating more needs and help more people. But okay, with that, I'll go ahead and wrap up. All right, folks, thanks a lot for coming on board. Any questions, I urge you to call us, 800-842-7799. We'd love to help you. Thanks a lot.
GoldenCare is always here to serve you with new tools, new products, new ideas, and new innovations, and always the best support in the business to help you succeed. So give us a call at 800-842-7799 and check out our website at www.goldencareagent.com.